Hello everyone, welcome and thank you for watching us today. My name is Ivan Adamovich. I am CFO and Deputy Chief Executive Officer of UnaFinancial. Today I will provide comments on the financial performance of UnaFinancial, share the latest business updates, and answer the questions you sent in the forum. You can also leave questions and comments in the chat room or below the video. We will sure to cover them as well. We appreciate your interest and support and hope that this meeting will reveal important insights into the operation of our business. Let's go ahead and get started. First, we will look at how the platform's key metrics have evolved over the past 4 years. In 2022, our investor base was 29,000 people. We have significantly grown our community, reaching a milestone of 40,000 clients this year. The platform has a strong presence in Germany, Spain, and France. The investor base is also getting more inclusive. In the last year alone, the share of active female investors has increased by 11%. Investor earnings have almost tripled since 2022 and crossed the 30 million mark this year. Another big achievement for us is the new milestone in the volume of loan purchased. In almost 4 years, we have doubled the amount, and now the figure is 1.1 billion euros. At the end of June, the platform's portfolio stood at 75 million euros. Demand is high, but we strive to maintain the balance by providing a constant supply. Our main priority is to keep making all payments on time. Thanks to this approach, since the platform was launched, we have not had a single defaulted loan, and the buyback guarantee has always worked smoothly. In 2024, we will focus on updating functional elements of the platform and improving the user experience. In particular, we introduced one-click investing. This has simplified portfolio customization options, which saves time for experienced investors and is easy for beginners. To date, 11% of the active investor base has set up a one-click portfolio. Last year, we began preparations to update the platform's website. We have taken into account all previous experience, current trends, and the needs of our users. We launched a revamped website and logo in the first quarter of this year. The new visuals greatly improved the ease of navigation, which in turn contributed to a better user experience. Currently, we are working on the redesign of the investor's personal account. Our goal is to create a more intuitive and simple interface that is user-friendly for investors, with different level of experience. Also, this year we expanded the income options with the feature to directly withdraw earnings to a bank account and updated a number of reports as requested by users. In particular, we have added a new report on investing funds to streamline your tax submissions. As we continue what we started in 2025, our primary focus is to keep the platform running smoothly and reliably. We will continue to enhance the user experience. Once again, we want to thank you for your honest feedback and valuable suggestions. We will strive to gradually introduce improvements to the platform functionality. We will also continue to work on the website redesign and, as I mentioned before, namely the personal account. And last but not the least, we will ensure a balanced supply and demand ratio. These efforts will help us build a more resilient platform that benefits our investors. Now let's turn to the group's performance. In 2024, we remain focused on enhancing operational efficiency and creating long-term value for all the stakeholders. As part of the strategy, we made the decision to concentrate the capital in high-potential markets. As a result, disbursement volumes amounted to $741 million, up 12% year-over-year. And in 6 months of this year, we have already issued loans worth $409 million. This reflects continued demand for the group's services. At the end of last year, UnaFinancial had total assets of $111 million, a decrease of 11% year-over-year due to divesting from underperforming assets. In 2025, this figure stands at almost $124 million, making the group more stable and liquid. Equity has grown from $4.25 to $7.4 million to solidify this position. Interest income and commission income grew and reached $202.3 million by the end of last year. In the first half of 2025, it amounts to $106.4 million, and we are planning to raise it further. Cost to income ratio is improving. It went down from 37% in 2023 to 31% in 2025. Last year, we started a global optimization to improve the balance sheet, and we continue it into this year. We cut the expenses and focused on expanding in the existing markets. The positive results of these actions are starting to show in 2025. With this strategy, we expect a notable increase in equity while keeping the liabilities on the same level. Net profit equaled $0.6 million, marking an increase from previous year. However, in 6 months of this year, the group has already made it to $5 million, and we expect it to grow further. As for key achievements of last year, UnaFinancial reached $2 billion in loan disbursements, demonstrating significant growth and strength in the market. This year, the group's customer base surpassed 20 million users, which show widespread trust in its services. In addition, UnaFinancial received recognition across 7 awards categories, including Best Digital Financial Service Provider in Asia, Best FinTech Company by APEC Insider, Best FinTech Group in Singapore by Global Business and Finance magazine. This accomplishment highlights our sustained leadership and innovative success in the industry. In 2024, UnaFinancial expanded its product portfolio by launching installment loans in every country of its presence. Then we established a strategic partnership with Microcredit Bank to launch a microfinance company in Uzbekistan and thereby expand our presence in Asia. In 2025, UnaFinancial officially launched the product in Uzbekistan, Unamalia. The company has obtained a license and opened an office in the country. We are doing the groundwork to enter more markets in the future. Namely, we are looking at India. It's too early to talk about the details, but we will keep you updated. We also plan to expand our product offering by launching car loans in Kazakhstan and further developing installment loans to individuals and small and medium entrepreneurs across our markets. Of course, we will continue to increase the volume of our lending activities and focus on growing net profit. We also plan to launch new brands in the regions of our footprint. Now let's move on the Q&A session. We got a lot of questions from you. Thank you for your interest. To save you some time, similar questions are grouped and you can read them on the screen. It is true that the French translation was discussed a couple of years ago, but in the end, we decided to concentrate the resources on a different aspect of the product. A mobile app is a wholly new branch for the platform that would require a separate support team, and we don't see enough demand to go to that land. A convenient and easy-to-use mobile version of the website seems more preferable to many investors who don't want to have another app for another platform. Also, in these years, we have been making improvements to the interface that were not huge, but we see many of our investors appreciate it. For example, we introduced a statistic page for the account that many had asked for, improved the deposits page, and added 2 more ways to manage your earnings for better flexibility. We also added a one-click portfolio for easier portfolio management. This year, we revamped the website and the logo to reflect the current state of the platform and its values. The next big step will be to finish the redesign and introduce the new account. So we hope for your patience. We plan to keep the supply of loans roughly on the same level as now. The interest rates depend on many factors. In a way, they help us balance the supply and demand ratio. Right now, we have no plans to change them. New loan originators may appear depending on the expansion of the group and the needs for funding from the new companies. In fact, we might introduce a new loan originator in the near future, so please follow our news on email and social networks. We understand the possible concerns of investors who want to feel their money is protected. Let me explain this. The liability to equity ratio increased at the end of 2024, mostly because of the translation reserve adjustment. It didn't impact the group's cash flows or operating performance. The group still has a strong base of liquid assets that can well cover its liabilities. In 2024, we started to reduce debt, and we still do it in 2025. Another step we made was to focus on profitable business units and product. The liabilities to equity ratio has significantly improved compared to the end of 24, improved by 37%. We keep a close eye on ratio and have a long-term strategy to improve it. We can already see the fruits of the strategy in the year's results. The group wrote off the goodwill and fully divested from the Vietnamese company in 2024 in particular. Interest margin decrease is just a change in the product. The product revenue is made up by interest and commission income. So the net margin on interest income after credit loss allowance plus fee and commission income actually rose 7.1% in 2024 compared to the previous year. To clarify, the $0.6 million figure refers to the net profit earned by the group during the financial year 2024. The amount of $6.3 million represents the total comprehensive loss, which includes not only the net profit, but also foreign currency translation differences arising from the conversion of financial statements of foreign operation into the presentation currency, USD. This translation adjustment does not impact the group's operating profitability. We operate and expand in regions with generally stable local currencies. At the same time, we recognize the ongoing volatility in global financial markets. We continuously consider the need for hedging and make decisions based on careful evaluation of potential impact and associated costs. Our main goal for this year is to generate sustainable profits and scale the best performing businesses in the high potential markets. The biggest focus is on Central and Southeast Asia, where we are developing our current products and launching new ones. For instance, last year we introduced installment loans in these regions. Now we are working on loans for small and medium businesses in Uzbekistan, Kazakhstan, and car loans in Kazakhstan. The group shows profit in 2025. We have reached $5 million in net profit by the end of first half of 2025, and we are planning to further increase it by the end of the year. Since last year, we have been closely worked on business optimization and increasing net profit. This strategy has brought its result. In 2025, most of our businesses are profitable. The best results are seen in Kazakhstan and the Philippines. We are working on improving our capital structure, both debt and our own. We are always considering alternatives for financing, including actively managing liquidity risk and strengthening its long-term capital structure. We have placed bonds for $2,500,000 on Kazakhstan Stock Exchange. It was a first touch to become a public company. We exited some markets and halted or shut down the businesses that were not performing well enough. This impacted the balance sheet in 2024, but allowed us to set a ground for developing for profitable units and growing profits. We already see the results this year, and we plan to focus on these companies. The company continues to operate in accordance with applicable law and regulations. We're actively seeking to clarify and resolve the issues affecting its registration and license to operate as a financing company. We're committed to resolving this matter responsibly and in the best interest of our clients. Mostly it is attributed to the currency exchange rates, as the US dollar grew in value and some other currencies depreciate slightly, namely the Kazakhstani tenge. The cost of risk has improved this year, and we are working to scale and expand our products, so the group's loan book is going to grow too. The share of defaulted loans in a portfolio is actually not the best representation of a business's well-being because of the nature of consumer short-term lending. The turnover is quite fast, so the defaulted loans appear on a balance sheet in a bigger amount than they would in a banking products. Also, we can lower the share of defaulted loans by sessions or by our own means. Cost of risk gives a better insight of the business, and it has improved since last year. By investing in Singapore, you are supporting existing businesses as well as developing of new products. For example, the money is used for opening new businesses or the introduction of a new product line in Asia. This will be all with the questions. Thank you for your time today. As always, we remain committed to our growth strategies and delivering strong results. If you have any further questions, you can always reach out by email. Have a great day.